Here at the Examiner, we did a series all about retail crime and retail theft. And a big aspect of it is the economic toll that it takes on companies, but also communities, which is a little more, one might not think that someone stealing XYZ from a grocery store could affect a community, but it does have those ripple effects. So at the broader level, just a pure numbers level, it's about $100 billion a year problem that these companies are having. And to put that into perspective, that's like basically the entire revenue of Target each year, which is an enormous amount.
Welcome to Reporter's Notebook, where we talk to the Washington Examiner's top journalists about the stories breaking on their beats. I'm Jim Antle. I'm joined today by economics reporter Zach Halaschak. And Zach, the big economic story of the last few months has been inflation. Thought we were really turning the corner on it. What is the latest?
Yeah, really the biggest economic story the past couple of years. Inflation, obviously peaked last year in June, but since then it's been falling as the Federal Reserve raises interest rates. The most recent reading is something called the PCE index, and that's the personal consumption expenditures. And that's actually the Fed's preferred gauge. That's kind of what they look at even more than the CPI, which is a consumer price index, which most of us look at and you read about in news articles. That showed that inflation ticked up slightly by about 0.2%. So it's now at 3.3%. Which is still above the Fed's 2% target, which means that Fed is still probably going to have to do a little more work to bring that down. Although it's kind of a mixed bag right now because inflation has fallen so quickly, and there's a concern that if the Fed raises rates too much or tightens too quickly, it could cause some ripples in the economy, hurt the labor market, and result in negative GDP growth.
And so the hope had been that maybe we'd seen the last of these interest rate increases, at least for a while, but now that's really an open question.
Yeah, it certainly is an open question. I think right now, if you look at some gauges, most investors think that the Fed will pause at its next meeting. It won't change interest rates, but a bigger group of investors thinks that they'll hike at a later meeting down the road, so like maybe later this year. But really, the pause would be just to assess and let those previous rate hikes kind of filter through the economy, and they get a better sense from more reports in the coming months whether another rate increase might be appropriate before the end of the year.
So another big thing that's been in the news is we've seen a lot of stores experiencing thefts. We've seen these smash and grab operations that get a lot of attention on TV news. What are sort of the economic consequences of retail theft? You've taken a look at this for a series that we've done at the Examiner.
Yeah, here at the Examiner, we did a series all about retail crime and retail theft. And a big aspect of it is the economic toll that it takes on companies, but also communities, which is a little more, one might not think that someone stealing XYZ from a grocery store could affect a community, but it does have those ripple effects. So at the broader level, just a pure numbers level, it's about $100 billion a year problem that these companies are having. And to put that into perspective, that's like basically the entire revenue of Target each year, which is an enormous amount. It's like the GDP of some smaller U.S. states. So that's a big problem for the companies because that means that they're operating, losing money, and that harms their operations. But then at the community level, when you have all these rampant thefts at, say, a store, especially in an impoverished neighborhood, and they're losing something like 10 to 20% of their merchandise through these thefts, which there have been cases of that much theft, at one location. Some of these stores have to make tough operating decisions whether to keep that store open. And if you're in an impoverished community and there's only one main grocery store there and it has to close down, that's tough for the community. So it really is not necessarily a victimless crime. It kind of has ripple effects that go out.
And there's been some discussion of a neighborhood here in Washington, D.C., where the main grocery store in that neighborhood may have to close, and that obviously inconveniences and hurts people living in that community.
Absolutely, and that's the why it's such a big deal is because the people that are being affected by this are the people who in often cases are the most impoverished among us in these neighborhoods where the crime's occurring.
So North Dakota Governor Doug Burgum, a Republican candidate for president, maybe not the highest polling candidate for president, but he has a policy position on an issue that's become really one of the few dividing lines, I think, between Republicans, at least the major Republicans, on tax policy. Talk a little bit about what he would like to do and how the party has received him.
Yeah, so I interviewed Burgum the other day, and he was telling me that he does support expanding the child tax credit, which has been around for years, but right now is about $2,000 per child. And it's interesting because it kind of illustrates, like you said, one of the few remaining rifts within the party. Supply siders and more market-oriented people tend to not like more of a child tax credit.
Right.
But there's been an emerging group within the party: Mitt Romney, Marco Rubio, Mike Lee. These more family-focused lawmakers who see supporting the family is a crucial policy position,
Right.
and so they support making that credit bigger. But the difference, and Democrats also support making the credit bigger. The difference is that Republicans want to do it with work requirements, and a lot of Democrats want to just hand out a check to any family, regardless of whether or not they have someone in the workforce. So it's interesting to see a major presidential candidate, one of the contenders who was up on stage in the debate, bringing this into the conversation. And I think it's something that will be talked about more going forward.
Yeah, because the previous Republican orthodoxy on this was that it was better to lower marginal tax rates because it would accelerate growth and it enhances incentives, work, save, invest. But there has been this greater focus on family-centered, family-focused, pro-family tax reform.
Yeah, and you're also hearing it from other presidential candidates as well. Ron DeSantis, who's right behind Donald Trump in terms of the polls. Donald Trump obviously former President Trump has a wide margin gap, but he's the next contender.
Right.
He recently came out saying, taking a line from Blake Masters, who ran from Senate in Arizona, saying that he thinks that the family should be able to operate on one income. That means either the mother or father stays at home and can take care of the family while the other earns an income. And that should be enough, he says, to support an entire family. And that's kind of the family-focused policy positions that you're starting to see emerge more and more in the GOP. And again, I think it's going to be something that'll be talked about on the campaign trail more and more.
Fiscal family focus. Say that 3 times fast.
Fiscal family focus, fiscal family focus, fiscal family focus.
Very good. Thank you, Zach. You can read Zach and the rest of our policy team's coverage at washingtonexaminer.com.